We have a couple of interesting value stocks to tell you about. At least our value stock strategist, Tracey Ryniec, does. She's here with me now. And this first one is one that you've talked about many times here, TAL International Group, TAL.
Yeah, they've been hot for seemingly several years now. Everybody keeps waiting, and so do the analysts, for this sector to kind of cool off, because there's only so many containers, right, that you need, and they make more, and then they lease them out to the big shipping companies. And those are like the dry and the refrigerated containers that go on ships that go across the ocean and all that. But it's still crazy hot. Utilization rate for them last quarter was still very high, 97.7%.
Okay.
That means nearly all of whatever they have to lease out is basically leased out. They continue to buy some new containers because the shipping lines are still, demanding more to lease. It seems that the shippers have kind of gone away from buying their own containers to actually just leasing. Some of that might be because of the tight credit market too, but this is good for TAL. They've raised their dividend 5 quarters in a row now. It's paying about 6% yield, so they're giving back, the cash flow to the shareholders. But, things look good. The analysts still expect earnings growth of about 15% for this year. Then they see it cooling off for 2014, but we'll see. So far, TAL isn't saying that they're seeing any cool off. It will be interesting to see what they say in this next earnings report, but all indications are utilization's still high, so that's when you want to be in this kind of company. Chart-wise, I put up a 5-year chart here because it's just been on fire. It's at the 5-year highs, just pulled back a little bit off that. It's value stock still. It's not trading super expensive. It's around 9 times. But we're kind of maybe reaching the end of this, container cycle, and then it won't be so fun. So while it looks cheap here, and it is cheap, and we're supposed to have the earnings growth this year, it's unclear what happens from here on out. But again, I've been saying that probably for the last 2 years. So.
Yeah, well, if you reach the end of this cycle for containers, it is not a good indicator for the economy.
Well,
right?
no, that's the other thing. It has been staying strong, so I do look at them as kind of the first clue as to what's going on in the global economy. And right now, the shipping companies are still leasing. So.
Right. Okay. Rock-Tenn, RKT, is the other value stock that came up on your screen this week. Now, they make paperboard and container board.
Yeah, these are the packaging guys. It seems kind of boring, like who needs packaging? Of course, you need it in everything. But these guys are interesting because the past couple months, they've been able to slowly push through price increases on container board and their other products that they make. They actually just announced an increase of $50 a ton on a certain specialized container board. The industry sources are saying that about 20 of the $50 has actually been able to successfully been pushed through. This is the first increase in that product line in almost 2 years. So it goes directly to earnings. That area has been interesting because there's been a lot of consolidation. Rock-Tenn itself actually bought out Smurfit Stone recently. Its competitor, International Paper, bought Temple. So now between those two and 2 other players, they control about 70% of the container board sector. Now, what that allows them to do is, make sure that inventory doesn't get too high. They can control kind of what the supply is and keep it in line with demand, and that means they can push through these price increases. So what you're seeing is...
That's a key thing.
Yes, and so the industry right now, the analysts believe, is really well managed because they can control the inventory, get the price increases through, it goes right to the bottom line, and then you can see these huge earnings increases for this fiscal year, next fiscal year, 38% both years. That's great. That's incredible for a company that's, making containers and dealing with paper. You could see, I put up the chart. It's interesting because as soon as they were able to start push through these price increases, the shares started to take off because that, again, goes right to earnings. Estimates are going up. It is a Zacks number 1. It's trading at 1-year highs here. It's around 13, 14 times. It's not super expensive. You do get a little bit of dividend, 1% yield with these guys. But a lot of the analysts believe they're going to be able to push through price increases in some of their other product lines and maintain these for the next couple of quarters. So this is one that has the earnings momentum plus a value play that's kind of rare. So it's an interesting story.
Okay. Do you own either one?
I do not.
All right. Check out other stock picks and stock picking strategies on our website, Zacks.com, if you're not there already. With Tracey, I'm Terry Ruffalo.